Good morning.
Good morning.
How are you doing?
I'm doing great.
Good. Well, thank you guys for joining. We should have some more people coming on soon, but Rhonda, you're muted. How are you
Okay,
doing,
here I
Rhonda?
am. Can you hear me? Let me turn my camera on. Sorry.
Yep,
Hi.
no, now I can hear you.
All right. I'm good. How are you? It's Jamie. Why does it say Wanda there?
I'm sorry, we got a little bit of a fuzzy connection.
Um. Anyway, I go by Jamie. I don't know why it says Rhonda there, but
Okay.
you know,
How are you doing, Jamie?
doing good. Doing good.
Good.
I actually have some questions about DSCR, so I'd like to talk about that.
That's wonderful. Yeah, no, we do a lot of training and good morning, Marat.
Yes, sir. How are you?
I'm doing fantastic. How are you doing?
Finally, nice to meet you.
Nice to meet you. Yeah, we do a lot of training, like product specific trainings, but we thought it would be nice to just kind of open it up to let's all jump on and open it up for any questions. I'll have a couple guys from my team on, and it'll be a great opportunity to just jump in. So,
I love
Jamie,
it.
yeah, if you got a couple questions on DSCR, you want to fire away?
I do. Well, I know that DSCR, the income is the rent, correct?
Correct.
Now, when you say that, do you also use income that they have on their bank statements, or you just use the rental?
So the nice thing about the DSCR, literally all we're using is the rental income from the subject property. On your application, we don't even list employment or income.
Okay.
So it's the ideal product for investors from
Yeah.
that standpoint, because it's for somebody that's honestly, Jamie, I don't want to deal with giving you tax returns where I've got 14 businesses that I'm a part of.
I don't
It's
want that
perfect for
either.
that, or people that don't qualify, or people that, income is coming from various sources where they don't want to take the time to try to document all of this. So there's any number of reasons. And literally the pricing is not that far off
Okay.
from a standard non-QM or even agency loan in a lot of cases. When you've got these higher credit scored, lower LTV transactions,
Yeah.
DSCR is pricing out competitive with Fannie Mae, because Fannie Mae, the LLPAs, for non-owner or cash out and units, you start stacking up those LLPAs.
Right.
In some cases, DSCR prices out as well, if not better than
Okay.
a
Because
conventional
yeah,
loan.
I have a client who's got several rentals he wants to do cash out on, and I think I'm going to push the DSCR for him because I don't want to use his tax returns. Otherwise, it'd be 12 months of bank statements, and if DSCR will work, I think I'm going to go that way.
Yeah, no, and that's the perfect guy that this program is designed for. And a lot of people, when they report rental income, they're overstating expenses. Schedule E doesn't look favorable. They don't necessarily qualify
Right.
trying to go full doc. So it gives them a great alternative. But good morning, everybody. It's 10:01. Uh, Jamie, I'll get back to your questions, but just want to kind of get the meeting
Oh,
started.
yeah, yeah. Go
So
ahead. Go ahead.
good
Yep.
morning. Welcome
Good
to
morning.
our first just meet and greet and open forum for scenarios, for questions. So let me kind of get started. My name is Jason Twiford. I am your account executive with Orion Lending. I've got a couple important people on the call. I've got Todd Pierce, who works on my team, Dylan Johnson, who works on my team, on the call as well. And this was just, we do a lot of product specific trainings. We do a lot of Zoom meetings with clients, but we thought it would be a great opportunity to just have an open forum. Let's jump on, ask any questions, meet the team. Let us help you figure out how to work our portal, our system, really open it up for anything that you guys would like to address. So we had no idea what to expect. When we do a product specific training, it's not atypical to get in excess of 100 people on it. So, we figured this would potentially be a smaller group, but it's all good. So thank you guys for being here, and we'll just kind of open it up. Jamie had a few questions regarding DSCR, but we can just open it up, and you don't need to raise your hand. We'll be really I'm sorry, I have ADHD, like terribly. Shiny object. Rob put a message in the chat. I'm like, all right, let me jump into this. So Rob, we can jump into, kind of your question, and welcome to the company, welcome to the team, and we can answer questions on that. But we'll just open it up for anything you guys have questions on.
Yeah, I appreciate it, Jason. Since you called on me, I'll just kind of spearhead it. I've been drinking through a fire hose for the past week and a half. My company got acquired, haven't been through an acquisition. So was doing a lot of non-QM stuff, had some pleasant experiences, some very poor experiences. Is Orion located on the East Coast, Jason?
So our corporate office is in the city of Orange, California, but I've got offices in Dallas and Charlotte. So we literally sit in most time zones.
Okay, so I won't name names, but I won't have to worry about getting an email response before 11 a.m. Eastern.
No, I'm in California. So Todd is up in Seattle, outside of Seattle. Dylan's in California. But no, we get started early. So it sounds like you're East Coast.
Yes, sir. Yeah, North Carolina. And I dealt with a lot of issues with a West Coast investor that, they wouldn't respond before 11 a.m. Eastern. But no, that's great. Being in California, in terms of the DSCR, for North Carolina, the property taxes are reassessed either every 4 or 8 years, depending on the county. The investor in California was having us calculate the property taxes as if this was a California purchase and the tax bill was being reassessed after the sale. That's not the case. So if there is an existing tax bill available when we're trying to get this ratio, is that what y'all are going to go by off of, or is there some other calculation?
So here's kind of the weird thing about just an open forum. We may get some questions that we're not completely dialed in on. I do a lot in South Carolina. Todd, are you more familiar with North Carolina and how we would handle this
I
problem?
didn't catch this state. Okay, so North Carolina. I mean, I'll get my fingers into that, but realistically, we would always have an opportunity to bring in documentation that would show what's real, what's current. Here's the date title reassessed it. Per title, it doesn't get reassessed for 4 years. This is the current taxes. As long as you're providing that through title, we will get that number in play.
Yeah, no, if title says based on this transaction, the property taxes are going to be X, we will absolutely use that number. And I mean, we have an office in North Carolina, so I have to assume we have figured out how to appropriately calculate property taxes in North Carolina. We do a handful of business in North Carolina. I've never had this issue come up, which is an indication that it has not been a problem. Right, but what we do not do, what I can tell you we do not do is apply California logic to all 50 states, right? Because I can't take your sales price times 1.25 and tell you this is what your property taxes are. Each state is going to be unique and different.
The other thing I'll throw out there is we give a real visibility of this situation, because in every case, per protocol, when your loan's submitted, if we're pulling taxes at that time, our property tax estimator, and we let you know what we're using if it differs from what you provided. So we're all up front from the very beginning on how that's going on. And if we need to dig into title and get that documentation, fair warning right at the start, and we can get that taken care of.
Yeah, and it's not atypical that we do subscribe to a service that tells us what the taxes will be on a specific transaction based on that sales price. And you get access to that. And if you think the number's incorrect, I mean, we literally just had one where we escalated it and we overturned it. And I mean, the service doesn't get it 100% accurate every time. Now, Mario, are you able to hear us now? I know you said you weren't able to hear us. What I can tell you is your screen is flickering. Okay, good. I was going to suggest you jump out, jump back in, but if you can hear us, fantastic. Okay. Well, I'm glad, Rob. Now, Rob, what company are you with?
It's called Advantage Lending. It's a smaller local correspondent. Yep. I was previously with Homespire Mortgage, who got acquired by NFM. The only other thing I'll ask you, go ahead, Jason. I'm sorry.
Oh, yeah, no, we just got your company approved. So fantastic. Glad you joined the team, and we look forward to working and partnering with you.
For sure. I actually just brought on a Hispanic speaking loan officer as well. Do y'all offer I-10?
We do not offer I-10.
Okay.
But we still offer DACA, including down payment assistance with DACA, which is, to the best of my knowledge, we're the only company out there that is offering a DPA program that accepts DACA borrowers.
I'd love information on that.
Yeah, no, we can get some info on that to you. It's our conventional DPA. It's a grant program. In addition to that, we've got a really substantial marketing library that's got about 200 flyers available in both English and Spanish to market any program and product that we have available.
Wonderful. Thank you.
You got it, sir. Okay, Jamie, did we dive in and answer your questions adequately on DSCR?
I think so for the most part. So like when I take an application for him, when I submit to you, I've got no employment, no income. What you call
Correct.
No. I'm listing the subject property and then all of his other properties as well.
So what we want is a schedule of real estate that will correspond to the credit report. Right? What I don't want to see is 2 properties on the schedule of real estate and 7 mortgages, because now I'm stuck in this, like,
Okay.
what the heck's going on? Now, I'm
Okay.
not, it doesn't matter if they cash flow or they're losing $1,000 a month on these other properties. I'm only focused on, the particular loan and the subject property. So it sounds like you've got an investor that may have multiple properties.
It does.
So you just want to list the schedule of real estate, the corresponding mortgage, and then each
Okay.
loan is going to be underwritten based on the rental income of that property, based on the PITI payment of that property. So you've got, and this, I will tell you, a very large percentage of the DSCR business we do involve investors that are purchasing or refinancing multiple properties at the same time. So we're very well versed on how to do that. We send all of those
Excellent.
loans to the same underwriter. So there's total consistency in the underwriting
Good.
and the approval process. You don't get one approval that looks great and the other one looks terrible. And you're like, how in the heck did this happen? Right? It's gonna be very uniform.
So Jason, if you don't mind, if you just stay on this topic, my name is Murat, by the way. I'm also from Best and Funding, and we are about maybe like 10 minutes from you, Jason, right? We're in Orange County as well, California.
Right on.
Yeah. So real quick on the DSCR. So the only thing that you want to see is, as a bank statement, is the cash to close funds, right?
Correct.
As an income or the support that transaction. Along with that,
The reserves.
What's that?
As well.
reserves,
Yeah.
yeah, like
Okay.
okay.
And incidentally, at lower LTVs, like 70% LTV and below, we don't require reserves. If it's a cash out refi, I can use cash out to satisfy the reserve requirement. And not to overload the answer and give you too much information, but there are some instances, for example, if market rents come in at 2,000 and your client is collecting 2,250 a month, if we can document that they've been receiving that above market rent, we can use it depending on, as long as it's not astronomically higher than what market rents come in at. So there may be some unique situations where we ask for something else. And I've had clients be like, you know what, we'll just take market rents. I don't want to deal with asking the customer for bank statements. We still cash flow and we don't need to go there.
I see. Okay. And
And
then
how high LTV can we go?
Hold on just one sec, Janie. Murat, go ahead.
And yeah, sorry about that. And then in terms of, let's say, investing in LLC, if there are partners, let's say 50-50 or whatever the ratio is, we are just allowing the percentage of that from their bank account, right? We're not allowing 100% of those
Correct.
funds available. Okay.
Correct. On the use of business funds.
Because I had this issue a couple of times where, I have enough funds, but because of the partner, they're allowing only certain percentages. So,
Yes.
okay. And then my last question on this one is the units, maximum units.
4 units.
Just 4. Okay.
So we do 4 units. We will also do mixed use with specific requirements. It's got to be more than 50.1% residential, maximum of 4 units. The commercial space has to be a minimum of 400 square feet or larger, minimum loan amount of 400,000. But we get a lot of inquiries on mixed use property, and we can do mixed use on our DSCR. Also, Fannie and FHA accept mixed use properties.
Got it.
And Jamie,
Jason, on that, hi, this is Martin. Quick question on that mixed use. If
Yes, sir.
there's 4 units on top and then the bottom is for business, does that count as 5 or more, or is that, or how's that?
Unfortunately, I wish I could massage it differently, but unfortunately, it's 4 total units. So if you've got 4 residential on top and then commercial on the bottom, that would be 5 units. And we would not be able to help you with that one, unfortunately. It's good to see Equity Smart represented here with you and Jamie, and I don't know who else is on
Awesome.
from
Hi,
Equity
Martin.
Smart.
We're always on. Martin and I are always on everything we can. What, LTV for the DSCR?
So we go to a max of 85% LTV.
Sweet.
I was going to ask on foreign national, and then I think Jose, right? Is that Jose?
Yes, Jose just popped a question in about foreign
Just to pop the
national.
question. Perfect time, sir. If you
Yes.
can, when it's time to move on, I'm happy to hear about that as well.
Okay, foreign national is awesome. We literally just closed one a couple days ago. As long as your client has a primary residence in their country of origin,
Done.
that's it. We don't need we don't need alternative credit. I don't need credit scores. Max LTV, I believe, is 75% on the foreign national program, and we absolutely slam those. They've got to have a visa and a passport to be able to enter the US. But as long as they fit that very broad spectrum, our pricing on the DSCR foreign nationals is exceptional.
Awesome. How about the documentation? You just want, of course, English translation, right?
If they've got any documentation that is in a foreign dialect, then yes, we would have to have it certified, professionally translated into English.
Okay.
Does the
And it has-
reverse, I'm sorry, I thought.
No, you're fine. I was gonna ask, primary home, it has to be single family or any type of property they own.
As long as they've got a primary residence in the country of origin, we can accept it. We're not
Okay.
specific that it has to be a single family. If they've got units, that's fine.
Sounds good. And then no credit, no income. You just want a U.S. funds or U.S. bank accounts?
Yes.
And how long?
How long do we need it? Dylan, I know you're the foreign national expert. How long do we need money sourced? I believe
I believe it is 3 months, but give me a second. I'll pull it up right now and get you an answer.
Hey,
Perfect.
Dylan,
Okay.
while you're pulling that up, I have a similar question, because I'm about to start getting into foreign nationals.
Mhm.
When does the money get taken out from their country? The reserves, how long do they have the reserves needed? When is that timeline?
Yeah, he's going to get an answer on that. I believe it's 90 days that it has to be seasoned in a U.S. institution.
Right.
Oh, in the US, okay.
Okay. All right.
I
Any
will be,
other
I will be
questions?
on it. Don't worry. We'll jump back onto this. So don't let
Yeah,
me
we'll
hold you
come back.
guys up.
We will come back to that. Dylan, just jump in when you've got it. How about you, Michelle? Any questions we can answer for you?
No, I'm just listening and taking notes.
Okay, wonderful.
Thank you for asking.
Of course. Jose, did we get you all squared away?
I've got some info on that asset thing on the foreign national, because I just realized
Perfect.
looking at the guides, I went through this last week with our file we just closed. 1 month is all that required. We are looking for 1 full month statement. And here's a really interesting tidbit that's come out recently, and I'm looking this at our guidelines right now, foreign national. Large deposits do not need to be sourced. It's one of the reasons that this works for us. So the file that we had last month needed some money in the bank, and they weren't going to have that in a full month statement. We were allowed to provide transaction history with URLs that showed since the last full statement that we are required, and we had no questions on that $46,000 deposit that was made.
And then on the point of reserves, just to quickly jump in as well, is reserves don't need to be transferred to a US bank account. So you can keep those in a foreign account, and we're going to use what the current trade rate is for that and use that for your reserves if you don't want to move those out of the foreign accounts.
Okay. Thank you, guys.
Dylan looks like Matt Damon. You've heard that before, haven't you?
I have. I've heard two before. It depends on my facial hair. So if I have none, I'll get Matt Damon. But if I do, I get Jesse Plemons.
Whatever that is.
All right, Dylan, you're stealing the show. Todd and I aren't being accused of looking like any Hollywood celebrities.
Oh,
Oh, where?
All right, guys. Okay, so even better answers than what we anticipated. That's, what's unique about this is normally when we're doing a training, we've dialed into it and we know all the answers. Here we're getting shotgunned with stuff that we may not be as well versed on. So it's been interesting and exciting for us.
I love it. I love it.
Yes. Jamie, anything else that we can answer for you?
I'm sure I'm going to have questions on this because we're about to get started. He has 4 and he wants to cash out all of them. One of them, I'm not sure if he has any equity in, but we'll get there. So yeah, I don't have to list employment. I mean, what's on the 1003 then? His name, address?
His
Social-
name, his address, his fully completed schedule of real estate,
a schedule real estate,
with the
that's it.
corresponding mortgage lender. So really, it is a very slimlined package. I know
Yeah.
you were in the business, you got out for a period of time, you're back in. This is going to feel like you're doing loans back in 2004 in the
Thank
subprime
God.
days. When your loan package doesn't look like a phone book, if anybody remembers what those are. Yeah, it's a very simple process, and we love doing that business. It's an easy file to underwrite.
Sounds like it.
It's an easy file to work through, and your investors are happy because you're not calling them every other day with a whole laundry list of income documentation related items that you need them to dig up or their CPAs need to provide.
Cool. Very good. I love it.
Jason, I have a couple scenarios that I'm currently going to push and work.
Okay.
Can I go through that? I came in a little late. I couldn't log in for some reason. So you might have covered it. So sorry if you did. I have a scenario in another state for DSCR, and they were going to go through it, and then he changed his mind because he found another one that is a lot smaller. So one question is, what's a minimum loan size? And also the number 2 would be, can I do 3 of those small ones at the same time? Like,
Okay.
I don't know, Kentucky,
So-
for instance.
Yeah, no, I mean, Kentucky is a great state to invest in. I actually invested in Kentucky a very long time ago. It didn't work out very well for me at the time, but that was ancillary issues. But minimum loan size is $100,000. And as far as if you wanted to come in and purchase 3 properties simultaneously, absolutely. We love getting those multi-packs. It's a great way for you to grow volume and grow production with your investor clients. And yes, like we had touched on this briefly. If you submit them all, we make sure to assign all of those to the same underwriter. You get very consistent results with respect to conditions. Each approval is going to look the same. It really does simplify the process for you and your processing team, and really on our end as well, because all of these approvals really, for the most part, should look the same, and you should be able to satisfy the same conditions.
So on this scenario, I have one for in the same lender. It's at 11. What do you call it? It's 80,000, 110,000, and then the other one for, I think it was for 90 or 65. But because I was going to work with one for 400,000, so that was going to be fine. But now that he's switching it around, kind of threw me in a loop. Am I able to put it all together?
So the challenge there is my minimum loan size is $100,000
Right.
per unit.
So you won't mix
2
them
of
both at
those,
if
yeah,
it's
we
at the
wouldn't be
same
able to
time.
help you with 2 of those. And I don't know anybody that's doing DSCR below $100,000. Quite frankly.
What if you add improvements like to improve the property?
We
ARV?
can't, we don't, it wouldn't be like an ARV, a rehab loan where we're looking at future value. It's going to be based exclusively on sales, the lesser of sales price or appraised value, unfortunately.
And my other question is, I have another investor that has 16 properties that is thinking about pulling some cash out from each of those investment DSCRs to actually grow more, obviously. Do you guys look at everything at once in a big shell? Because that's kind of what I'm trying to put together for his portfolio, so I can do them all at once?
Yes. So what we would look at in that situation, we do have a loan to one borrower maximum. I believe it's $5 million. Um, so it depends on what the size of these loans are. If they're smaller loans, two, three, $400,000, we may be able to accommodate you and do all of those. The
Yeah,
largest,
they're between 3 and 700.
okay, so we would just need to look at what the total was. We would need to see what the exposure is with all of those. If they exceed the 5 million, we could request an exception on that. The nice piece about our non-QM product, including the DSCR, is, we've written our own guidelines to a great extent. We can make exceptions on that. In some cases, we'll interface with investors, but we've written guidelines that we can then deliver to multiple different investors. So it may give us some additional flexibility with respect to making some of these exceptions. But we would take that package in. We would have it all underwritten by one underwriter. And again, we want to deliver a very consistent product to you to be able to make your life easy, your processor's life easy, and trying to digest, 16 different loans. I had one that was an 11 pack that were all really weird lease option type scenarios. I mean, it was a very complicated situation. Documentation was challenging, but we got them all closed. So we're not foreign to being able to take these multi-packs and this big portfolio of transactions for a particular investor and putting those together.
Gotcha. So just get their schedule of real estate and narrow it down to see which one we want to put in.
Yep. And
Okay.
again, if he's got 16, some of them might not make sense.
Right.
Some of them may not have the enough equity where LTV is not going to work. But you could certainly go through it, do the analysis, figure out which properties make sense, and we could certainly help you with that.
Cool.
And then Jose, you had a question on down payment assistance. Down payment assistance is really a forte for us. We're exceptional at that. We have 3 distinctly different down payment assistance programs that we have we basically wrote the guides, we underwrite it, we fund it, we service it. We go down to a 600 credit score. We follow AUS. Your client does not need to be a first-time home buyer. There are no income limits on most of these products. And I've got everything from a repayable second down to a grant program that's literally forgiven at the close of escrow. So if you're looking for DPA and you need a good DPA lender, we're it. My team, we fund 25 to 35 DPA transactions a month, every month. Like, we literally knock it out of the park on DPA. We're actually doing a DPA specific training on Thursday at 10 a.m. So you should have gotten a link and an invitation to that as well if you would like to do a deeper dive and get some more information on DPA.
Hey guys, that program is great. I haven't used Orion myself. I used it before with EPM when they had it, but they dropped it. So I stopped using that DPA program. But the forgivable, I'm telling you, I'm going to get back into it. I closed a whole bunch of loans that way. So look into that. That's
And
a
here's
free
what I'll tell
promo.
you.
Jason's going to send me some money for this prompt.
I'm going to give you an incentive on your next deal with us. Absolutely. And I will tell you, and again, not to talk smack about any of our competitors, but EPM's price structure, everything was at a cost. They charged you 1 point to be able to get the product. We don't charge that. In some cases, we have lender credit available on this program. We give you a full rate stack. They had some overlays where, DTI was capped at 50% on FHA. We actually follow AUS. So 47 front end, 57 back end with DU approval. We take it. And we offer a conventional alternative on that grant program, that DPA grant. So yeah, thank you for the plug. You got to hook up on your next deal. And our product, and from a servicing perspective, I mean, I have told, like, our process is exceptional. And to give you a little bit of background on our team, we have our own operations team. So from setup through funding, we've got dedicated staff. And I know with some of the companies that I see represented here, you have dedicated underwriters. So not only do you have consistency, but you've got the same account manager, same underwriter, same funder on every transaction. So it makes it really easy for your processing team to scale the business up when they don't have 5 loans with 5 different underwriters. They've got 5 loans with the same underwriter. The same people can answer questions on every one of their loans. And we really do try to promote that exceptional level of customer service and that partnership where, listen, I've got Todd and Dylan on the phone. There are 3 of us here to answer any questions you guys may have. We want you to feel safe and comfortable sending your business to us so you can go out and originate new loans. You're not stuck trying to figure out like, okay, I can't go get new business because I'm babysitting this file because I don't feel like I'm getting any information. So we really do want to create that deeper partnership where we can help you grow your business and give you the ability to get out there and make things happen.
One question on the DPA. I'm out of Phoenix, so there's some programs I know. Are you able to stack their DPAs?
So we get asked that question quite often, and we've escalated this. And I've got a client here locally they are actually a DPA provider. So they are one of those typical DPA, first-time home buyer, 80% AMI, low to moderate income type of scenario, where we have stacked some of their programs with our DPA, where they'll get an additional grant toward closing costs. So really, in order to be able to stack those, number one, it has to be a Fannie, Freddie, FHA approved product. Because we're going to do this either FHA, conventional, or USDA. So as long as it fits one of those molds, then it should be eligible. It's also going, if there is a recorded lien, it's going to go in a second or third position behind our DPA programs. Now, what I will tell you is, outside of kind of a couple of unique offerings associated with a DPA provider, we've never actually seen one of these come to fruition. We've never seen one of these go all the way to the finish line, but it is something that we can do and we will do it. We just need to make sure it's the right program. So if you want to jump on and send us some information on that, we'd be happy to do it. And just send us, you can email myself or the team. We just need your name, email, phone number, NMLS number, and we can get you locked in with credentials. So you have full access to the marketing studio, pricing engine, everything that you would need to be able to put your business together. Something else that we do that's really unique, and I'll just kind of plug in some of the stuff and see if that prompts any questions. But before we do that, anybody have any questions? Let me jump over to page 2. So Jose, you're good. Mario?
Yes, we're good.
Okay, so something that we do that's unique also is we allow you to use lender credit to pay your origination fee if you're going borrower paid. And if you're newer in the business, you may not understand the deep impact of that, but especially as we get into this refi market and you're going to find yourself trying to compete more, being able to go borrower paid gives you an added level of flexibility. And when we allow you to go borrower paid, a lot of our competition looks at the Dodd-Frank and TRID this way, that if you're on a 2.25 comp plan lender paid and you go borrower paid, you still have to charge 2.25, which completely eliminates any benefit of going borrower paid. We allow you to charge more or less than your LPC with us, more or less than your lender paid comp. So if you're at 2.25 and you want to charge 2.5 going borrower paid, you can. If you're at 2.25 and you want to charge 1.25 going borrower paid, you can. And what's unique about us, if there is enough lender credit to pay your origination fee, we will then use lender credit to pay your compensation. So it almost treats it like a hybrid lender paid comp at a lower comp amount. And it gives you an added level of flexibility to be more competitive on any transaction. And what's cool is we do that on VA also. So I'm one of the only lenders that will let you charge more than 1% on a VA borrower paid transaction. The only caveat is you have to have enough lender credit or seller credit. And I'm the only lender in the country that lets you do it with seller credit. So as long as you have enough lender credit or seller credit to cover your origination fee, you could charge any amount that you want going borrower paid on a VA transaction.
Are you capped at 3% on conventional versus like 6% FHA or?
On seller credit or
Seller
credit?
Sorry, yeah, my bad.
So conventional's cap, so FHA 6% pretty much across the board. Conventional is 3% down to, I believe, a 90% LTV. Once you are below 90, like 89.9, then it does jump up to 6%. So we just follow standard agency guides. Whatever the agencies do, we do it. We really have virtually no overlays on any of our agency business. Other unique products, so obviously Fannie, Freddie, Jenny, seller servicer. Our VA pricing is exceptional. We've got 2 dedicated VA underwriters on our personal team. Our VA underwriting is awesome. If you have VA, we're a great partner for you. Literally, our VA pricing is probably top 2 or 3, if not number 1 in the country at any note rate. Our DSCR is awesome. We give you 34 additional states with no licensing required, which is a nice feature. But our non-QM, we've got a great bank statement program. We have exceptional jumbo pricing. And a flagship for us is our P&L program. We do a lot of P&L business. And part of the reason we do so much P&L business, our P&L program does not require bank statements. So most P&Ls, most of our competitors, if you're doing a P&L product, they want 2 or 3 months bank statements that support the numbers that you're putting on that profit and loss. Our P&L program is P&L only. I don't need any bank statements to support the P&L. So, we just uploaded 3 of those yesterday. And the draw to working with us is, number 1, we understand how to put this product together and do it really quickly and efficiently. And we don't need the bank statements. And that's an absolute game changer, because a lot of these businesses are cash-based businesses where the bank statements don't match the P&L. As long as your tax preparer is willing to put together a P&L that helps your borrower qualify, we are good to go.
Jason, can you tell me again real quick, how do you get the ratio on the DSCR? It's something divided by something.
Okay, so it is the PITI divided by the rental income.
Thank you.
So to give you just a quick framework, and we'll pick easy numbers, right? So if the PITI payment is $1,000 and the rent is $1,000, you divide those and it equals 1.0. That just means the rental income covers your payment, you're on the good list. And not to say that if the rents don't cover the payment, you're on the bad list. We have programs for that. We actually have a no ratio program, which literally, if the payment's $1,000 and your rental income is only $500, you divide that out and your coverage is 0.50. The lowest coverage I've ever seen was like a 0.38, where you ask yourself, why is anyone doing this? And here's the thing, I don't want the answer, because I know there's an answer and it's probably not something that we want to put in the file. So, it's kind of like I'm on a need. You can tell me anything. My line is always secure, but we're on a need to know basis. Some things we don't need to know. You could tell me, but that way, you see an adjustment in pricing. You see sometimes an adjustment in LTV where you're not going to be able to go 80 or 85. You're going to be capped at 75 on those lower coverage. But we also then give you pricing enhancements. If the rent was $1,500 and your payment is $1,000, now your debt service coverage is 1.5. And anything at 1.0 or greater is fantastic.
Right.
On the subject of DSCR, we also do first-time investors. We do first-time home buyers. So we can do DSCR for somebody that doesn't even own a primary residence. And that's a very unique product for us.
How about the credit score and you said first time is okay, right? So the credit score, and then anything below 1 is, of course, the pricing, right?
Yes, pricing and anything below 1 is going to be adjusted. Pricing and LTV is going to be adjusted. But we do credit scores down to a 620 on the DSCR program. What's really cool about our DSCR and our non-QM in general is that we will price based on the highest mid score. So if you have 2 borrowers, one of them's at a 650 and the other one's at a 750, as long as they qualify for the program, we price based on the 750, which is very unique.
Mm-hmm. And any exception on the...
I'm sorry, Murat?
Score.
Any exception on the credit score? Generally, no. So if our floor is 620 and you've got somebody at a 618, very unlikely we would be able to make an exception on that. We probably need to get them rescored and brought up to the 620 minimum requirement. You were cutting out just a bit, Murat.
I was asking about any exception on the DSCR 1. Like, let's say we price it at 1, but it comes, I don't know, 0.85, 0.9.
Well, we have one that was like that. Okay. We priced it at 1.1. It's a purchase transaction. The rents came in lower than everyone anticipated. We could always do a reconsideration on the rents. We pulled comps. We realized, yeah, the appraiser was right. There are no comps that support a higher rental amount. We were at a 0.86. So what we did was we had them put a little bit more money down. We flipped it to an interest only, because on an interest only, we will use the interest only payment in determining the DSCR. So it allowed us to get back to, we were able to restructure it and get the numbers exactly to a 1.0. And now we got back. There would be no, if you're at a 0.98, you're getting pricing at a 0.98 and LTV at a 0.98. That's one area that we will not make an exception. But we will sharpen the pencil and find a way to get you, we will give you a path to get you back to a 1.0.
This has been great, Jason. I've got to go. My phone's blown up, my email's blown up, but I thank you so much. Thank you so much.
No, thank you. Hey, thank you for joining us. And if you need any help, just call us. We'll jump on a call with you direct and help you with those DSCRs. Thanks, Jamie. All right, guys.
Sounds good. I will also hop off. I have a couple of things also, Jason, but thank you. It was great to meet you.
Very nice to meet
and
you.
Everyone else, thanks for all the different scenarios. So definitely stay in touch. I have a couple of interesting things that are happening as well. So happy to share those.
Good. Please do. Please reach out to us. We would love to partner with you and help you grow your business.
Sounds good. Thank you. We will.
All
Thank
righty.
you, guys.
Take
Thank you,
care.
everyone.
Thank you. All right, guys. Our group is shrinking by the minute here. Anybody else have any questions that we can help you with? We've got Wilder on. Any questions from Wilder? Or Jaime, anything from you that we might be able to help you with?
No,
Jason.
I'm good, Jason. I'm good, Jason. I'm just here fly on the wall, just listening to everything and getting educated.
Okay, wonderful. Thank you for doing it. So let me ask you guys, was there value in this? It's kind of like we said, this was one of those, we strategize on how we can help our business partners grow their business. And we said, why don't we just open it up for whatever somebody wants to bring in? Would any of you come back and do this again? Is there value in something like this for your business?
I think it's
Definitely,
I liked it. When I heard it was the scenario, I'm like, oh crap, I want to jump on. But that's why I jumped on late, So I
Good.
wouldn't do it all
No.
the time, but I would do it like once a month or something, and I'll put my time in and do that.
Oops.
So I can try to squeeze you for approvals.
Hey, you can always squeeze us. We are definitely squeezable. We're like Charmin. Squeeze away.
Jason, I jumped in a little bit late too. I was on another Zoom that I had to take care of, but this is great. And I actually have a scenario right now, client looking to qualify for a DPA. And I know that you're the expert and have several different options. So I don't know if I should jump with you on a call afterwards and see what options we have, or
you know what? Let's just dive into it. People are jumping in here and everyone has the opportunity to ask a question. And I think that there would be value to the rest of the team that's here to hear your scenario and how we can help you put it together. So yeah, Wilder, jump on.
Okay, so client is looking for down payment assistance. She has a 720 FICO score, 719 FICO score. So that's what's 720. We're looking in the Imperial County thermal area. She has a house at 300,000. Our DTI is really good with her. So I was thinking going either initially we're thinking going USDA, which is 0%, right? But she does need help also with closing costs. So I don't know what you would recommend if going maybe 3% down payment with the DPA. And I was ideally thinking something if we can go where we can get up to 5%, because the salary is going to be helping with about $10,000 worth of closing costs. But I don't know if that'll cover all she needs.
Okay. Well, I mean, one, you
it's a
have
buyer that needs all money. Unfortunately, it's a good agent of mine and wants to help her out. And I'm kind of like, okay, they need some skin in the game, but she has everything else there.
Oh, you got this. What's crazy is so many of our DPA buyers fit this profile, right? Great credit, like 719 credit score, so really strong credit. I'm assuming income is stable.
Yes,
They want to buy. They're motivated. They're just missing one piece of this, which is cash to close. And I mean, dude, you're in California, right? Wilder, you're with Equity Smart, right?
Yes, correct.
Okay, Rita's office. We closed a deal not that long ago.
Okay, yeah, that's right.
Yes. Hey, we keep track of our good partners here.
Awesome.
So what I would say, you've got options, right? When some buyers come in, it's like, okay, we really need to probably fit them into this box because this is all that's going to work. This is a USDA market. I do USDA down payment assistance. So that would allow us to do 100% financing USDA, and we could bring in a second for 3.5%. So that second combined with 10 grand, that $10,000 is actually more than 3% of the sales price. We would now be looking at 6.5% in total assistance for your client. Okay, so there would be one option. I've got a grant program that I would love to fit this buyer in, and it's the big but. The grant program, the downside to it is your pricing is going to be roughly par, possibly a slight cost.
Okay.
There may be a conventional option if they're 100% of the county AMI. County AMI for San Bernardino, Riverside County is about $106,000. So if the income is under 106, conventional may be a great option because it would only provide 100% financing, nothing for closing costs.
Okay.
But the benefit to that program is there's no recorded lien. That money is forgiven at the close of escrow. So literally you will be refinancing them out of that higher interest rate after they've made 6 payments.
Okay.
So that grant program is exceptional if you had a 5 or 6% seller credit, which we may be able to go back and renegotiate this. And I could do help you do value checks if we need to bump the price up a little bit to squeeze some more seller credit in. But that would be an exceptional option because that's the one program that allows you to get the client out of it literally after 6 payments.
Okay.
Now, and a third option would be a repayable second, because my repayable second, you could literally price it where you're getting, with this credit score, a 2 to 3% lender credit. So it would allow us to go, you could literally go lender paid, cover your compensation. We look at it this way. It's going to take you about 5% to close escrow between your comp, title, escrow, and prepaids. So our target is to go 100% financing, plus we've got to cover this additional 5%. If you've got 3% from the seller, I could put you on a repayable product that's going to get you another 2.5 to 3%. We cover your comp, all closing costs. I mean, we literally just closed a transaction for Enrique Flores with your company on one of these programs where we refunded the EMD back to the borrower at the close of escrow.
Wow. Okay. Awesome. Great.
Well, you like I said, you're bringing a buyer in where, fortunately, we have options. You could go repayable second, you could go USDA. If we could squeeze a little more seller credit, I would try to put them on the grant program.
Okay. Sounds like the grant program would be definitely a great option. And I think we may be able to go ahead and do that. So, yeah, expect to go ahead and see it. I will talk it over with, now as far as the grant program, payments. Payments begin right after closing as well.
Yeah. So you could go FHA or conventional.
Okay.
In this case, I might even, if they're at the county AMI, we waive all of their LLPAs. Your pricing becomes more favorable on the conventional side. I might look at conventional. And then they just have a standard Fannie or Freddie first trust deed. There's no second lien. So that's the beauty of that product.
Okay.
Right. So second is literally forgiven. If we do a conventional 3% down, they're a first-time home buyer, so they'd be eligible for 97% LTV. If we did a 3% down, we're giving them $9,000 at the close of escrow. It's like us sliding a big bag of $100 bills over to your borrower at the close. And then they've just got the Fannie or Freddie first for, in this case, it would be $291,000. and they'll start making payments. You know, if we closed in December, first payment would be February 1. So they start just standard Fannie Freddie loan, have them make their 6 payments, and then you'd be able to, assuming rates continue to trickle down, because you're going to, I mean, DPA, you're going to be above market. You're probably going to be somewhere between 7.25 and 7.75 on that first trust deed. And then we just flip you into, you know, your basic Fannie Mae rate and term refi after 6 months.
Right.
You know,
Okay. Yeah.
and
And sorry, Jason, go ahead.
oh yeah, what I was going to say is the nice piece about that, we underwrite this, we fund it, we service it. So if you bring that loan back to us in 6 months, number one, we waive your underwriting fee. So we're going to save your client $1,000 right there. And then on top of that, we're servicing the loan. So I will net your impound account. I will take your payoff and subtract out what's being held for taxes and insurance, decreasing your payoff, which just decreases cash to close or the new loan amount for your client when we do that refinance transaction.
Very nice. Awesome. Yeah. And I
Question on
actually,
the same scenario, exact same scenario, because I know a lot of people in the same spot too. Can you do a buy down off of this as well? If you have enough
Yes.
credit?
Yeah. Oh yeah. Well, we give you a
Look
full
at that,
rate.
Wilder. Take a look at that. That's a good option.
wow. Wow.
Oh
That's
yeah.
awesome.
And you worked with EPM. EPM gave you one rate, right? We don't give you a rate. We give you a rate stack.
They gave
So
you
that
two.
if you were to get additional credit, you could do the buy down, take a lower interest rate at a cost. Our DPA also allows you to incorporate a 1-0 or a 2-1 temporary buy down. I mean, we're looking at one right now where the buyer's not happy with the monthly payment because the interest rate's higher and they've got seller credit. Great, we'll do a 1-0 buy down. We're saving them like $400 a month in monthly payment. And by the time this loan adjusts, we're going to have them out of it.
And then Wilder, look at that realtor credit too. So don't forget to, if he really wants to help his client,
Right.
say, hey, are you willing to give up a quarter or half a point? And that's when you really know if they really want to help him or not.
Well, or not,
I squeeze
right?
my
Yeah.
realtors too. So
Awesome. Well, thank you. I appreciate the suggestion there. This is
Yeah,
awesome. This was awesome, Jason. Thank you for this, because yeah, it gives us the opportunity, bring live scenarios and just hear what's going on. So just to answer your previous question, I appreciate it, and I'm sure we all appreciate to hear what you're doing here.
Okay, well, that's awesome. And I appreciate that feedback. And this is definitely something I think there's value in it, and we will definitely offer this again. So I think it's just going to be a matter of timing. If you've got files and you have scenarios, you'll jump on, and if we don't see you, we won't get our feelings hurt.
Okay.
Okay, guys. Carmela, you've been quiet. Any questions we can help you with?
Hey, Jason, I don't have any questions. I'm just here for our LOs, just want to know what they think of this meet and greet, their questions.
Okay, well, I love it. More equity smart. This is
Yeah.
almost like we're just doing an equity smart training for you guys.
I always make them aware of the trainings that are possible for them, to attend and increase their knowledge.
Wonderful. Well, hey, and let us know, Carmela, when you want us to do another training specifically for Equity Smart.
Of course, of course. And also, I need to hop off now because we have another training after this. So thank you so much, Jason. Thank you, everyone.
You're welcome. Thank you, guys.
Thank you.
Thank you. Have a good one.
You got it, guys. Take care, Wilder. All right, Diana, you've been quiet. What can we help you with?
It's because I've been working on the side.
That's good. That's good.
I was listening. What are your typical turn times?
24 hours. So we get to
24.
manage our own turn times. We have our own team. We're completely, I'll say, self-contained. So our system is very transparent. You upload the file, with the exception of DPA, where we do assist with the disclosures. You upload your 3.4, reissue credit, run AUS. You can send disclosures out real time, track the disclosures, upload the complete package, push it through to underwriting. We move it into underwriting, and turn time in underwriting is about 24 hours. Turn time at every milestone, 24 hours. So condition review, CTC, we consider every CTC a rush. So we try to push those out. As long as we get it in a reasonable time, we try to push those out same day. Docs and funding, generally 24 hours or less. Docs normally go out same day if we get the file cleared for docs.
Okay, thank you. Thank you. That's
You're-
real important.
You're welcome. All right, you guys are the
Oh.
stragglers. I've got you and Michelle, the only two people left. Any other questions from you guys?
No, I'm actually meeting with a client on Friday, that has rental properties wanting to do a cash out refinance. Plans to
Okay.
purchase another rental.
That sounds
So,
like a
and then I'm-
DSCR home run scenario where you're going to be able to
Yes.
look at their portfolio, guide and direct them on which properties would make sense to refinance while still managing their cash flow and pull enough cash out to purchase a new property that's going to enhance cash flow. So I think that,
Absolutely.
yeah, no, and if you need any help, any guidance, direction, partnership on that, feel free to reach out to us.
I appreciate that. Also have a new DPA client, so meeting with them this evening.
DSCR and DPA, you're speaking our language.
All righty. Well, thank you very much. I appreciate your time.
You
I
got
was
it. Thank
listening,
you.
I promise.
No, hey, I do the same thing with every Zoom call that my company makes me get on. I've got one screen of what they want me to listen to, and I'm half listening while I'm getting work done. So,
Exactly.
but we've perfected it where when something perks our interest, we're like, oh, let me tune in for a moment.
There you go.
Right on,
All
Diana.
righty. Well, you
thank
gentlemen, everybody have a great day. Thank you.
You got it. Thanks, Diana. All right,
Bye-bye.
Michelle, you've got us all to yourself.
You know what? It was just very it was very educational for me.
Michelle, what company are you with?
Freedom Choice Lending.
Okay, good. Well, thank you for joining us.
Thank you. And I am registered for Thursday's the next Zoom.
Good.
That you'll be having. Yes. So
Well,
I will be
fantastic.
back. Yes.
Well, you're welcome to come back. And if there's something you have questions on and you need some guidance, direction, just to be able to jump on. Look, I got two rock stars on the call with me. These guys
Okay.
are exceptional. So if you ever need help, feel free to reach out to us.
Thank
We'll be
you.
happy to kind of walk you through your transaction, your scenario, and really just assist with whatever we can.
Okay, great. Thank you so much. Thank you. Thank you.
Oh, you're welcome. You're very welcome.
Take care.
Okay.
And I'll see you soon. Yes.
Sounds good. Thank you very much.
Bye-bye.
Guys, I'm going to end the event and then I'll ping you both right back.